What's up, everybody? Thank you for tuning in to another episode of the CPA Zone, the podcast where we discuss tax strategies and accounting tips for entrepreneurs and real estate investors. My name is Ryan Pulis, and our company, the Pulis Group, offers tax planning and advisory services for entrepreneurs like you. Whether it's bookkeeping, tax planning, or CFO services that you're looking for, we've got you covered.
What's up, everybody? Ryan Pulis here with another episode of the CPA Zone. Today, we're going to talk about how you read your K-1. So a K-1 is really just, it's similar to a more sophisticated W-2. It's a tax document reporting your share of partnership income and loss for the year. So whether you're a partner in an operating partnership or an LP in a real estate syndication, you want to make sure you understand how to read your K-1 and just get how it impacts your taxes. We have a sample K-1 here from a hypothetical syndication, a real estate investment. I've included a link below in the show notes so you can follow along if you want. Very basic K-1. Now, on this, you could also just find a blank K-1. It's the 2023 version, Schedule K-1 for Form 1065. If you Google that, you'll have a blank one, and you could follow along really just as well. So at the top left, you're going to see Schedule K-1 Form 1065. That tells us we're dealing with a K-1 from a partnership as opposed to a K-1 from an S corporation or a trust. Under that, you're going to see partnership or information about the partnership, Part 1. And this just has the partnership's EIN, name, and address. Under that, we have Part 2, information about the partner. So in Part 2, we're going to have the Social Security or EIN along with the name and address of the partner in boxes E and F. Box G has options that tell us whether it's a general or a limited partner. So on our sample K-1, the box is checked for limited partner. Box H tells us whether we're dealing with a domestic or foreign partner, domestic meaning US based. And in our case here, that box is checked, domestic partner, US. H2 has information it gives us more information about the partner if they're a disregarded entity, so like a single member LLC. On box I, we have the type of entity the partner is. So in our case, the investor is an individual. So it says individual on line I. I2 would be checked if this is a retirement plan. So if the partner is an IRA, let's say. Under that, we have Part J, the partner share of profit, loss, and capital. So here it tells us in terms of percentages, the profit percentage, loss percentage, and capital percentage for the partner receiving the K-1. Now under that, we have box K, which shows us the partner share of liabilities. So we have that broken out by non-recourse, qualified non-recourse, and recourse liabilities. So if you remember, these play a role in determining basis and your at-risk amount. Talked about that in last week's episode, talking about partner's basis. Next, we have box L, which is partner's capital account analysis. So this starts with beginning capital account, beginning of the year, then capital contributed. So if you're looking at our sample K-1, there's $100,000 for capital contributed during the year. They made a $100,000 investment. Then you see current year net income or loss. Losses are going to be reported as a negative. So we see a negative $63,600 here, which is the share of the loss passed through. After that, you have other increases or decreases. If you have something here, there's generally going to be an explanation telling you what that is. And then withdrawals or distributions. On our sample K-1, we had a $10,000 distribution, which then takes us down to the ending capital account balance for the partner at the end of the year. So this box L information, very good to know, along with that box K above with the partner share of debt, which also plays a role in basis. Now under box L, there's a checkbox in M for did the partner contribute any property to the partnership with a built-in gain or loss? And this is checked no for us, did not apply. Then box N, it reports the partner share of any unrecognized section 704C gain or loss. Again, nothing here. We're dealing with a pretty simple, straightforward K-1. So now we're moving over to the right-hand side of the K-1, Part 3, which gives us all the items of income, deductions, credits for that partner. So this is really where the meat of the K-1 comes in. So partnerships have to report certain items of income, loss, or deduction separately, so they're picked up on the individual partner's personal return correctly. So for example, capital gains are reported separately because depending on the type of capital gain and the individual's income level, the rate that capital gains are taxed can vary from one person to another. Capital gains rates are 0%, 15%, or 20% generally, and those change based on your income. So let's take a look at some of the more common boxes here. Box 1 reports ordinary income or loss. So this is your typical operating business. Box 2 is going to give us your net income from a rental real estate investment. So as you'll see in our sample K1, there's a loss of $63,600 in this box because we're dealing with a real estate syndication, hypothetical. Box 3 is for other rental income or loss. So this is where rental income from personal property would show up. For example, if you rent equipment to others, it says rentals that aren't real estate. And box 4 is for guaranteed payments. In a partnership arrangement, a partner may be compensated a fixed amount for services they provide to the partnership. So that's reported on this box 4A. 4B is for payments that are paid based on your capital account. And then 4C is it's simply a total of the guaranteed payments in 4A and 4B. Now boxes 5 through 10 are for investment types of income. So box 5, you have interest. Box 6 is for dividends, 7 for royalties, 8 short-term capital gains, 9 long-term capital gains, 10 is for section 1231 gains and losses, which are essentially capital gains and losses from the sale of business assets. Box 11 is for other income. There are multiple codes that can be used here, and we're not going to go through all of them and we're not going to go into the details. It's really just a catch-all for other income types that are required to be reported separately to the partners. Box 12 is where section 179 depreciation is reported. So regular depreciation, bonus depreciation, those are going to be captured in the income or loss from boxes 1, 2, or 3, depending on the activity type. On our sample K1, part of the loss is from bonus depreciation taken on a cost seg study in our hypothetical real estate syndication. But box 12 is for section 179. Now this is required to be separately stated because there's certain limitations at the partner level that can come into play. Box 13 is for other deductions, so similar to box 11, but for deductions rather than income. Again, many codes you can deal with here. We're not going to go into the details. Box 14 is for self-employment income to partners. On our sample K1, this is blank because we're dealing with rental real estate, and that is not subject to self-employment taxes. Box 15 is for tax credits passed through to partners. Box 16 is simply a checkbox to tell us if there's a K3, which is a separate document that's often provided with a K1, and it reports information about foreign income and foreign activity, which we do not have on our sample K1. Box 17 is for alternative minimum tax items. So there are certain adjustments for AMT, and the partner share from the partnership are reported in box 17. And box 18 gives us information about tax-exempt income and non-deductible expenses. So these items impact your basis, if you remember from last week's podcast, but it's either tax-exempt if it's income or a non-deductible expense. Now, box 19 is where we find out our distributions. So on our sample K1, we have a $10,000 distribution. So we're going to get on our hypothetical syndication, they're paying a 10% rate of return, $10,000 in distributions on the $100,000 investment. Under that, we have box 20, which gives us additional information about amounts that are found in other boxes. So for example, we see box 20 as code N with a amount 6,500. That code ends telling us this amount is for business interest expense. So sometimes business interest deductions are limited. So we need to know how much is business interest deduction in case we have a partner that has limitations that come into play. Under that, we have box 21, which tells us the amount of foreign taxes paid or accrued, if there's any. In our case, there's none, or it's blank on our sample K1. And box 22 and 23 let us know if there's more than one activity for the at-risk or passive activity purposes. If there is, you should receive some type of schedule breaking numbers out by activity. So As you can see, there's a ton of information that can be reported on a K-1. So our sample K-1 is very basic. Again, a link to this copy will be in the show notes. Things can get really complex quickly with partnerships. So it's always best to use a professional when you're dealing with K-1s. But at a minimum, you should at least know what information is being presented to you, what it's telling you, and how it can impact your taxes. So that about does it for today's episode. If you found value in this episode, please leave us a 5-star review and hit that like and subscribe button. Until next time, have a great day.
So that about does it for this episode of the CPA Zone. Thanks for listening, and I hope you found something valuable that you can take away. We are taking on new clients, and if you'd like to work with us, then go to our website and fill out the client intake form on our contact page. This can be found at thepulisgroup.com/contact. That's ThePulicegroup.com/contact.